Welcome to Stock Talk on May 1st at 4:59 p.m. Eastern Time. We talked about big market movers yesterday. What were the market movers? One of them was Apple earnings, which may be a catalyst for the markets to push up or for it to go down. Another market mover was the meeting minutes that comes out tomorrow, so be on the lookout for that as it moves the markets up and down. It may move in a significant margin. So before we talked about Apple earnings, and we have Apple for the first time, we're going to start with Apple pulled up on the 180-day chart on the Think or Swim platform. I want to show you guys something what happened today, right? On the 1 minute chart, we noticed that NASDAQ during intraday today kept going up while the Dow Jones was held in the negative. And sometimes it was like held like negative 100 points at one point, right? It was in the negative and it closed negative 64, but the NASDAQ was being held up. Why was that? People were anticipating Apple earnings. You can see that Apple continually trended up between the bottom VWAP, the middle VWAP, and the top VWAP. You can see that it bounced from the bottom VWAP to top VWAP, bottom, top. You can't see this really clearly because of the earnings, but there you go, right? This could have been a good day trade if you wanted to. But what happened? Obviously, after market, Apple beat earnings, and it looks like it beat it by a significant margin, so we had a massive surge up. Let's take a look at Apple on the 180-day chart. Where did it surge to? Well, it pretty much surged to its previous peak at 178. Okay, so now we're having a small sell-off. Is that abnormal? Of course not. People sell on news, but what's the most important factor? Apple beat earnings, and it went up significantly. Looking at /NQ, which tracks the NASDAQ futures, we can pretty much see the same thing as NASDAQ has gone over 100 points, right? As Apple has gone up. So, let's take a look at SPY on the 180-day chart. You can see that SPY did go up a little bit. It didn't get affected that much, of course, because it tracks the S&P 500. Looking at SPY on the 180-day chart, we talked about this yesterday, right? We identified a resistance area. So this is the most close resistance area around 268. This was the resistance area because this was the start of the gap down candle. And once again, we could not hold or go over this resistance. Now we know that there's a support at 261.28, which was the start of the gap up candle. So it was probable that this was the resistance, this was the support, and we talked about this yesterday, in which the best trade right now is no trade, because we have market movers this week, and even though it may swing up today, tomorrow it could still swing down. It can continue to go up if the Fed meeting minutes are still releases optimism or with the economy and stuff. So what does that mean? Well, this means that right now we're in this channel, right? This is no surprise that we're fluctuating between these two lines, the support and the resistance. One thing to keep in mind is, look at what happened today. A red candle followed by a massive green candle. This is generally a good sign of a reversal back up, okay? So looking at the 1 year chart, you may see this a little better. So we formed this tail reversal candle. We form a reversal candle doesn't mean it'll reverse every time, but this is the type of candle we want to see when there's a possible reversal. Well, you guys can see that this candle kind of looks like this candle, right? So it's no surprise that if this does reverse up back tomorrow, where is the possible area? We talked about this as well in our past videos. This circular area is basically the SPY target. Why is this target? Well, we see that SPY has been making lower highs, right? Showing by this slanted going down line. And we have a resistance at 271.36, which is the start of the gap down area during this day, right? Where does that coincide with each other? It converges pretty much at this day around this area, so markets are generally attracted to that area because it wants to test the long-term bearish pattern, right? It wants to test it. Right now, we might still go up. I mean, we can easily come down, but we might also go up. So why take a trade right now, especially with all these news items coming up? Unless you want to gamble on earnings, but if you want to gamble on earnings, it's like 50-50. I bet you can, get the same odds maybe at a casino or something, right? Sometimes okay, anyways, let's, looking at this, we talked about major sell-off, recovery, smaller sell-off, recovery, right? So major sell-off, recovery, smaller sell-off, we still expect a recovery up here. But keeping a lookout on the long-term trend, on the 3-year trend, we do have a bear flag pattern. We expect SPY to climb to 271 to 272, but it doesn't have to because there might be a potential big drop coming up ahead, right? So looking at TVIX right now, TVIX tracks volatility, which follows the VIX index. Right? TVIX has a support at 676. What happened today? Yeah, Dow Jones went down, but TVIX went down as well. You guys can see that it's been holding under the 20 EMA on the 180-day chart. It's currently trading at $6.95. So is that any surprise? Not really, right? Do we expect this support to hold? Well, it could, but it could also easily continue to fall, right? As SPY managed to push, if it does manage to push to 270 or whatnot, then we can expect volatility to fall below its support. So is this a volatility play right now? Once again, I don't think so. Even though you guys could think, oh, we're back at the support, just because as SPY moves up, generally volatility will keep moving down. All right, let's visit a couple of things looking at 4/CL, which tracks crude oil futures. Crude oil futures has a support at 67.44, right? What's been happening? We've been fluctuating. Let me extend this line to the right. Between a support and a resistance. What does that mean? Looking at the 180-day chart, we're at the high. We're establishing a pretty bullish consolidation at the high. Even though crude oil fell today, we formed this nice reversal candle at the support, right? These lines are drawn in for a reason, right? Looking at the 1-year trend, it's pretty much the same thing. What does that say? It says crude oil at the moment right now is still bullish, and crude oil follows the ticker GUSH. So as 4/CL is moving up, GUSH is moving higher. So today, yes, it went down. GUSH went down 1.23%. Did that really mean anything? Not really. Looking at the 3-year trend, we've noticed that GUSH has been making lower highs. And yesterday we did talk about if GUSH just moves horizontally, if it just plays around the resistance area, what will that do to the 3-year trend? It will break the 3-year trend. It will be bullish, right? Because it would have crossed the 3-year trend line. One thing to keep in mind, looking at the 180-day chart, we did talk about a resistance at 33.59. This was the start of the gap down area for GUSH, which is acting as a current resistance. Regardless, GUSH is once again presenting as a potential good buy opportunity, because should crude oil push up from the support again, we can expect GUSH to keep moving higher. The more it tests the resistance, the more it is likely to break, right? Especially when we're consolidating at this area. A bullish consolidation, not a bearish consolidation. Looking at DRIP, for our own amusement, people, keep kind of talking about going into DRIP, which I still don't understand. You guys might be like, oh, look, we broke over the 20 EMA line. Is this the buy point for DRIP? No, right? We broke over here. We broke a little bit over here. We broke it over here, only to get rejected and come down. Focusing on the big picture, right? These rectangular boxes are when it breaks the major support. Breaks the major support, continues to fall. Breaks the major support, fall. Breaks major support, fall. Breaks the major support, what do you think it's going to do? On the 1 year chart, we're still trying to catch up with the 20 EMA. We still have a couple of days left before we test the 20 EMA, but it doesn't have to get there before it might continue to fall. Recall yesterday that, I don't know, people sometimes forget like things really quickly. Sometimes I don't understand, but yesterday we made a 3-year low at $8.11. If you guys were to buy in, sure, you guys could have bought in here and made 1%. But again, that's a dangerous move. We're at a 3-year low. It might keep going lower. Why take the chance, right? Why take the chance? All right, so let's take a look at 4/GC, which tracks gold futures. Looking at the 180-day chart, we talked about when gold futures closes under 1309, that is a bearish pattern for gold. You guys can see that we broke under the support, and not only did we break under the support, we have kind of went down pretty significantly. We're currently trading at 1304. So what am I looking for gold? Well, gold has a support around 1297. Okay, that's where we're expecting for it to there's a possibility of a rebound. It doesn't have to rebound there since it has broken the major support. Regardless, JNUG follows 4/GC, but JNUG went up 1.66% today. Gold fell over 1%. JNUG went above over 1%. Let's take a look at what's happening in JNUG. JNUG has been coming down, right? We know that there's a support at $13 pretty much, and that it broke this previous support. So this is no longer applicable. What is this telling us? JNUG is still on a downtrend. Yes, it went up today, but it's just hitting the 20 EMA. It could easily, as gold falls a little further back to 1300, if it does that, we can see JNUG continue to fall. Where am I looking for a JNUG reversal? Well, it might reverse here, but this is a less probable area of reversal. I would expect it to reverse. I would be more comfortable taking a position around $13. Right, guys? So right now, it is clearly on the downtrend. Looking at 4/NG, which tracks natural gas futures. Natural gas, we talked about a resistance at 2.808, a support at 2.755. What's been happening with natural gas? It's been fluctuating in this channel. Is it surprising that natural gas stopped right here at the end of day? I don't find it surprising at all. We've had this trend line set up for weeks, this trend line, right? Where did this trend line come from? How did I draw this trend line? This peak, right? So it's not unusual to see it stopping here at the end of day. Are we going to take a position on UGAZ? No. Are we taking a position on DGAZ, which is the inverse of natural gas? We're looking for one. Okay, why is that? Natural gas broke over its peak. It came down, right? False breakout. We're retesting the resistance. There's a possibility of it breaking out again, but again, we want to see confirmation. If this is the support, we want to see confirmation of the support. But if it can't hold up again and gets rejected by the resistance again, what does that mean? That's a DGAZ play. Let's take a look at DGAZ. What's been happening? DGAZ is a support at 2541. We made a downtrend. We're almost back at the support. Are we going to buy in right now? Not yet. Look, we're still at 2630. We're not at the best buying area. The best buying area is around 2540. One thing to note, I drew in this line. It's been making lower highs, showing a descending triangle pattern. So if DGAZ does come down and you do get in, just be careful because the margin of profit is getting less and less, and at some point we're expecting a big shift up or big shift down, which you don't want to participate in. I don't think, because you can't really see it based off of trends. But regardless, this is a good time to buy in, a good time to sell. Well, you guys can stretch this up. Being a little conservative, you can make probably 5% on this trade. Not bad. Where do you set your stop loss? Down here, 1.5%. Should DGAZ fall tomorrow. So that is something I'm looking for tomorrow. And yeah, that's fantastic. Let's take a look at a couple of other things. So one ticker someone called out to me on chat was USLV, which tracks silver, I believe. And This was called out by Dynamic. Why was this so interesting? This is the 180-day support. Right, guys? Let me try to make this perfect. There we go. Around $9.07. What is happening right now? We're getting really close to the support. Do we have a confirmation of a reversal yet? Not yet, but we're looking for confirmation, right? Looking at this consolidation, we had some consolidation on these days, and then it started going up. Can we see something similar? We could, or we could just see a reversal back up. This is something to watch. This is very nice. I like this pattern currently because this is the second time it tests this 180-day resistance, right? This should be a strong resistance. No confirmation yet. This is a watch and see, but as it consolidates in this area, the more it consolidates, the better it feels to take a position. So we're looking at this. We're still on a downtrend. It could still come down tomorrow. Just be on the lookout for this one. I really like this one. Okay, so you guys also called out in chat LNTH. Okay, so here's LNTH, right, on the 180-day chart. We've seen a massive downtrend propagated by this earnings report before it came up. No earnings is coming up tomorrow. Are we going to take in a position right now? No, we're not. We're not going to take a chance during earnings. Doesn't really matter. It could easily come back down. I can see it coming back down. I can also see it push up. All right. We can revisit this stock after earnings, but right now, I just don't want to take the chance. Let's look at the 1 year analysis. Yeah, I like this 1 year analysis because it is pushing up, but once again, this may be a game changer. So just let's hold off for this ticker until tomorrow or the day after, later this week. PTX. Okay? PTX on the 1 year chart, what do we see? Right? I mean, this is pretty much a descending pattern consolidating at the support, which is 225. Right, guys? It's consolidating at the support at 225. Looking at the oh, no, guys. Who called this one out? Okay, this is not one to trade, right? What's going on here? What, 300 shares being traded at this area? Like, there's no volume to this. No trade. NFX was another one that was called out. Let's look at the 180-day chart for NFX. Okay, so here we go. NFX, look what happened. Earnings came out. It came down a little bit, right? This is why we don't hold during earnings, because you don't know if this is the start of the downtrend tomorrow for this ticker. So even though I like this trend, I obviously don't like this decline as earnings came down. But now you can argue that, oh, earnings came down. Well, can it just bounce off the 20 EMA and keep going up? I mean, it certainly can, but you guys can see that, the earnings, the earnings was on, yeah, so today, again, don't take that chance right now. I would not take the chance, especially when it's showing, it's like this red candle, that possibility of a reversal at the peak. NKE, okay. Let's take a look at this one. This is Nike, huh? Okay, Nike, interesting. Okay, so there's a couple of things to see, right? I kind of like this pattern. It's a little erratic just because we do see a high around this area, $70. Let's take a look at let's look at the 1 year trend. Right, so we do see a resistance at around $70, but then we have like a support that's around 64, 65. You guys can see that we didn't even hit the support at this point. We are still on the high area. Oh, look at this, guys. Like, we made a red candle followed by a green candle. We do have this candle. Yeah, so I wouldn't invest in this one just because the potential for profit isn't there, right? It can go up 1.5%. It can come down 2%. Right now is not a good entry point. Yes, this is horizontal trading. You guys can see a resistance up here, right? this is horizontal trading, but we're near the peak. In order for me to get to a trade, I might have to look for a drop to $63 to justify the percentage gain for a probable percentage loss. But until then, this is not something I would actively invest in. All right, that's it for all the tickers today. Like if you like this video. If you didn't like it, I hope you like it in the future. Subscribe, comment, put in more tickers. I love doing all this for you, and as the community grows, I love to hear about all your gains and profits. I feel like you guys are like, oh, I made money because of this strategy that you talked about. That's fantastic. As a community, let's all work together to build our portfolios. I'll see you guys tomorrow for another market analysis.